Kevin O'Leary, with a net worth of over $400 million, Shark Tank venture capitalist, and even a shareholder in Tesla.
I'm actually an investor in Tesla. Why? Because I can now see the path to profitability.
That's right, ladies and gentlemen. Today we're reviewing where he stores this $400 million in his publicly traded funds, O shares, and ETF investments. Now, before we jump into reviewing these investment portfolios, guys, I think we should take some advice from Mr. Wonderful himself.
My covenants are very simple. My trust has to pay out 5%. Over the last 40 years, 71% of the market's returns came from dividends, not capital appreciation. So rule one for me is I'll never own a stock that doesn't pay a dividend, ever. Number two, diversification really matters. So I never want to own more than 5% in any one name, and you know that really works when you go through periods like 08, 09, where you have volatility in sectors. And number three, when you start to look at capital for multi-generations, you want preservation.
All right, passive income investors, here we go. We're going to start reviewing his 4 publicly traded funds where he's storing that whopping $400 million. Starting with OUSA is the ticker symbol, with the top holdings being Apple, Johnson & Johnson, ExxonMobil, Procter & Gamble, Chevron, Home Depot, Pfizer, Verizon Communication, Cisco System, and Merck & Co. And if we take, there's that Merck & Co. Am I even saying these right? You can let me know in the description box below. But this portfolio is mainly made up by the healthcare sector at 18.8% of the overall portfolio. And we can see that actually the top weighted holding has a little bit more than 5% of his portfolio. So he's bending his rules a little bit on that one. But nonetheless, guys, this is a very heavyweight healthcare portfolio and consumer goods, which is a fascinating little pie chart that kind of breaks down the wild diversification, with energy being the smallest amount. And mind you, these accounts are very fascinating when it comes to dividend payments because they are paid monthly. But the only problem is they're very choppy, and it's only about 2%. Each one of these portfolios of the two we're going to look at right now only make up to 2 to 2.5% dividend yields, but it's neat that he's able to pay that out monthly. So if we take a quick look at the chart and the performance, this is going to be his best performing portfolio of all the ones we're going to look at, having a rate of return of about 42% over the last 4 years. The dividend isn't very accurate on Google Charts, so what I like to do is come into my trading platform where we can see a little bit more conveniently the entire expense ratio, guys, and the dividend yield. So the dividend yield itself is 2.36% on this one, and if we take a look at the expense ratio, it is a whopping 0.48, or roughly 0.5%. Keeping in mind, the best performing and safest investment you can pretty much make is in a Vanguard index, and this only has a 0.03% expense ratio. So to keep that in mind as we continue to move forward here, guys. So moving into his next investment, guys, here we're going to take a look at OUSM. Now, what is OUSM? Well, this is basically a small cap dividend investment kind of little deal thing. What does it say at the top? We scroll all the way to the top. It's a Russell Small Cap Quality Dividend ETF. Let's get that right. So scrolling back down here, guys, let's take a look at the top holdings. I don't know these very well. We have Cypress Semiconductor. We got Encompass Health Corp, Watsco, Monolithic Power System, Eden Vents Corp. I'm not going to go through these because I'm just going to butcher them, but you can see them here, guys. And you can see that this is much more diversified in smaller percentages, making up 245 positions in this one. And the largest part seems to be industrials, making up 23.29%. Performance-wise, it's a bit newer of an ETF that has been made, so we can see that the performance hasn't had a long period of history, but over its current 2.5-3 years here, we're looking at a 15% return, with a 2.06% dividend yield, and they all carry the same exact management fee. Now, if you guys actually enjoy looking at these pie charts and you want to find ways of doing this yourself, in my own personal dividend portfolio that I've put together, I've been using this little iCloud numbers, and I actually put together my entire dividend income on my stock portfolio. And it's really nice to see these in pie charts because there's not a lot of things that can do this conveniently, and this is actually done all automatically, so we can actually see my monthly dividend income that's spread out and how it's diversified. So over here we got portfolio value in which sectors, and over here we got dividend income by sector. We can see consumer discretionary makes up 30% of my current portfolio, and it also pays out 41% of my overall dividends, which reminds me, I need to do a little diversification. But if you guys are interested in some of this stuff, I'm going to do a further breakdown on this wonderful thing because it's all automatic, and you can just get this at Passive Income for Dummies. It's literally only $10. I definitely suggest you check it out. But moving forward, sorry for the ad. Moving forward here, we're taking a look at the holdings on our next one, ladies and gentlemen. OEUR shares FTC, the FTSE Europe Quality Dividend ETF. So taking a look at this one, guys, we can see that some of the holdings in this are absolutely wonderful, by the way. We got companies like Nestle, Roche Hill, we got Novartis, Total, BP. BP is the big oil energy company. There we go. These are massive, massive companies, and they're also some of the biggest dividend payers because this one, even though the largest percentage, again, is healthcare, where a lot of these ETFs seem to be focused, apparently consumer goods and healthcare. So there's still two big parts of the portfolio, but these things pay out usually really healthy dividend yields. So we can see this one actually makes up the largest overall yield of 3.64% on the dividend. And it's also had probably the worst performance over the 5 years. So you get the good dividend, again, paid monthly, by the way. It's nice that these things pay out monthly. So moving forward here, nonetheless, guys, the last one and probably the most interesting one in my opinion. The OGIG listed, guys, is basically the Internet Giants ETF, according to Mr. Wonderful himself. So if we take a look at OGIG, the top holdings are Alibaba, which I really enjoy. I think that's a good holding. Alphabet, Facebook, Amazon, Microsoft, Tencent. Like, these are all amazing companies. There's 86 entries within this one as well, guys. And taking a look, there's literally only 3 in the pie chart. So it's pretty evenly diversified by 3 little sectors there. Really good diversification, mostly in the United States, because that's where the best, largest tech companies currently stand, except I think Alibaba is a really good purchase, nonetheless, for Chinese exposure. So nonetheless, guys, if we take a quick peek at this one, the performance on it has been subpar since its in creation in 2018, which I find odd, considering the growth companies like Microsoft and Apple have had. So I'm really confused as to why this thing has been trending sideways for as long as it has, and it doesn't really pay a dividend yield, guys. So, I mean, and you're still paying the expense ratio. It's the most confusing holding in his entire portfolio. But honestly, guys, when you look at the overall performance of his best portfolio, again being OUSM, and we were just to compare this to something like a Vanguard index, your rate of return is going to be so much better just be buying the Vanguard index, which if you don't know what that is, it's just the 500 largest companies in the US all put into a fund. You get a dividend yield, though not paid monthly. The rate of return is still at market best. So I would love to know in the comment section below what you guys think of Kevin O'Leary's $400 million funds here that you can personally buy into his publicly traded funds. And also, guys, I'm going to be doing some portfolio updates. So I'm going to continue trying to migrate a lot of my portfolio into this so I can keep track of the dividends a little better. If you're a dividend investor, this thing is absolutely wonderful for helping you keep a better track, as it just works through iCloud, so you can access it just about anywhere. But I hope you guys enjoyed this video. Let me know if you have any questions in the comment section below. But stay cool, stay awesome. I look forward to chatting to you real soon.